everyone, my name is Lisya Indrayana from International Program of Islamic Economic and Finance, Universitas Muhammadiyah Yogyakarta. In this occasion, I will present about the Indonesia's regulatory framework, especially in banking risk management. First of all, we go to the Bank Indonesia. Bank Indonesia is the main regulator of all banks in Indonesia. It means that all of Bank Indonesia is under their supervision. Bank Indonesia working independent and without any intervention from the government and from the non-government. Bank Indonesia has three main duties that are establish and implement monetary system. The next is regulate and maintaining the operation of financial system, and the last regulating and supervising banks in Indonesia. On the other hand, the Bank Indonesia has four rights in their authority and supervision that are right to license, right to regulate, right to control, and the last right to impose the sanction. In doing their supervision, Bank Indonesia using two main approaches that are complaint-based and risk-based supervision. The next slide is about the banking risk. The definition of the banking risk, or we can call it as the risk, is the possibility of undesirable outcome which can cause losses if not anticipated and managing it properly. On the other side, the banking risk will cause so many disadvantages that are impact to the shareholders, impact to the employees, impact to the customer, and the less impact to the economy. There are 8 types of banking risk. First is credit risk, market risk, liquidity risk, operational risk, legal risk, reputation risk, strategic risk, and the last compliance risks. This is the supervising cycle based on its risk by Bank Indonesia, or we can call it as the board of directors in each bank in managing the banking risk management. First is understanding the bank. The second is quarterly risk marking. The next step is the examination that focuses on risk and prepares a report on the result of the examination. And the last step of the cycle is the implementation of individual supervision and supervisory action. However, in managing the banking risk management that called the Board of Banking Risk Committee. The Board of Banking Risk Committee has owned on each bank. It means that every bank in Indonesia has its own team in managing and minimizing their banking resources. The board of directors of each bank is tasked with determining that banking risk is regulated in an effective manner. In carrying out of these tasks, it is necessary for the Board of Banking Risk Committee that active supervision from the Board of Commissioners, Board of Directors, and related risk management personnel selected by the bank. The second is establishment of policies and procedures to determine risk limits. The third is establish the harmonious management information structure to support risk management. And the last is establish of an internal control structure to managing the risk. The next slide is the risk management structure and scope. The general requirement for the application of risk management within Indonesian banks is contained in Bank Indonesia Regulation in 5/8/PBI/2003. Integrated risk management requires banks under Bank Indonesia supervision to managing their risk in an integrated management structure and to establish the system and management structure necessary to achieve this. The board of directors of each bank has the duty to establish that the risks of the bank runs in pursuing its business are managed in an effective manner. Bank Indonesia expects a bank that has highly complex business operations, including bond and currency trading, foreign currency lending, and securitization to have a more complex risk management structure than a bank that has a relatively simple saving and lending business. Bank Indonesia requires the risk management structure of all banks to cover the following risks that are market risk, credit risk, operational risk, and liquidity risk. And the last, if a bank has more complex business model, Bank Indonesia will also expect it to manage legal risk, reputational risk, strategic risk, and compliance risk. So that was the last slide about the Indonesia regulatory framework, especially in banking risk management. We can conclude that Bank Indonesia has the main duties to supervise and has authorities to control all banks in Indonesia. So all the banks under the Bank Indonesia supervision cannot run it freely, and it based on the Bank Indonesia regulator, so it can pursue the Indonesian economy. So that's all of my presentation. And thank you for your attention. I'm sorry if there are some missing in my presentation and my material. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.